raising $1.5 million doesn't mean we're $1.5 million richer.
Yep.
You know? But if we were bootstrapped and we generated $1 million in revenue,
Then we would be.
Whatever
decision that you make, be sure that you're 100% committed with that choice.
Mm-hmm.
You don't want to make a choice, whether it's accepting funding or denying funding, where in a week, 2 weeks, 3 months, you say, damn, I should have done that.
Mm-hmm.
Or I shouldn't have done this.
Mm-hmm.
I know that might sound a little bit vague and like, oh my God, really? But the reality is, you don't really want to have any regrets, but then also do the proper research, take the time in order to compile your thoughts, what you think, your goals, and then make a decision, believe in your decision, have confidence in that decision, and then move forward, strongly and with 100% conviction.
Yeah, venture hustles, life is really what you make it. Building up your brand is whatever you create it. Really ain't no limit. You just gotta love it. Working day and night, it's all about the venture hustle. Hey, venture hustles. Time to take it to the next level. Let's go.
Welcome to another thrilling episode with your host, Saj and Jack. And today we're unpacking a hot topic that's on every entrepreneur's mind: startup funding. So have you ever found yourself puzzled, juggling thoughts between bootstrapping or going down the venture capital route? Well, we've got you covered.
You do?
In this episode, we're diving deep into the world of bootstrapping, exploring its ins and outs and understanding why some entrepreneurs swear by it. But we're not stopping there.
Really?
We're also journeying into the universe of outside funding, decoding the mysteries of angel investors, venture capital, and how they can supercharge your startup. So if you're curious about what we'd do if we were in your shoes, you're in luck. We'll share our thoughts on what we would choose if we were to start another business tomorrow. So let's rock and roll. And I think this is going to be an interesting one.
I'm excited. Definitely a cool topic to talk about, for sure. But before we get there, how we doing, Mr. Saj?
We're doing great, man. This has been a pretty just rampant year for us, and it's been just nonstop. So never a dull day at the office and in the world of Saj and Jack. So we're excited. I think a lot of this we can relate to what I just said in the intro, what we would do if we were to bootstrap. So I think we could talk about some of those things as well.
100%.
So, going into this, a lot of this is going to be mostly about pros and cons of bootstrapping and pros and cons of outside funding, whether that's angels or VCs.
Yeah.
And the reason why we chose to talk about this today is because a lot of it, these are accessible options or just options that you think about that are most important or the necessary next steps in your entrepreneurial journey with your business. And this is going to be less about how to raise funding and more about should you raise funding and should you bootstrap. So I think we know that we've been on both sides of the spectrum. We are actively involved in this. So I think that I'm pretty excited to talk about it.
100%, without a doubt. So Saj, for the viewers here, you mentioned bootstrapping and then outside funding. Can you give us some clarity, let's say, about outside funding, what that means, maybe what it involves, the different kinds of outside funding potentially? Kind of give us maybe a baseline here.
Of what outside funding is or what bootstrapping? Outside funding?
Yeah.
Just angels, VCs, raising money from angel investors or venture capitalists that are more larger institutions that will back you. Or firms,
okay,
large amounts of money, typically north of like 50,000, 40,000.
Okay.
Sometimes angel investment is even smaller, but that's really what outside funding looks like.
Okay.
Yeah.
Now compared to bootstrapping.
Bootstrapping is basically like being a one-man band. You
Okay.
know, I mean, at least initially it is. You're funding your own gig. You're using your own savings. You're reinvesting your profits back into your band, trying to grow it. And that's ideally the idea. It's tough. It's gritty, but it gives you total control of your business
Right.
or startup.
Now,
And it's destiny.
and it's destiny, you say.
Yeah. I mean,
What-
keyword destiny.
What are some primary reasons you think entrepreneurs would or should choose to bootstrap their startup?
Freedom.
Okay.
I think freedom is the biggest reason why. But maybe it means you're calling the shots, right? You're not answering to investors, which is people that can control the outcome of your destiny,
Right.
I think it's mostly about, some people do it out of desperation or just not having any options. But if
Correct.
you had to choose, which in our position we can choose now, and it's about maintaining control, staying true to your vision. Also, like, the way I feel is that when you're bootstrapped, every win is a win. You know, like every single thing is a win that you've earned. It's hard earned. It's never been given to you. There's no shortcuts,
Yeah.
right? What would you say are some, I guess before that, maybe we do a little bit fundamentals, right?
Sure.
What does bootstrapping mean to the non-tech savvy startup world people?
Well, I mean, it's similar to what you had just mentioned, right? Where it's yes, you could be a one-man band, but essentially what it means is all the money that is circulating or that is needed to start the business, to run the business, to expand the business is coming from one source and one source only, which is the founder, the CEO, the person who started the company,
Yeah.
right? I mean, from a base level, it's pretty short and sweet. No outside funding at all. And that includes, let's say, family, friends, and then VC, angels, whatever the case may be. But bootstrapping is purely, this is my company. I just started it. Let's say tomorrow. I want to put $20,000 towards it, $100,000 towards it.
I mean,
and
that's
all you.
being generous. Typically, it's on a shoestring budget,
Yeah.
right? Like where I've got a couple, I've got a couple grand or a couple $100. I want to start this idea. It's just going to be me, or maybe me and a partner.
Correct.
That's typically what it is.
Yeah.
But yeah, man. I mean, I guess from an outside funding perspective, how would you define outside funding in the context of startups?
Well, I mean, again, similar to what you had mentioned before, but really what it comes down to is, whether you have started the company and it's very young, so less than, I mean, I guess for clarification, a startup would be considered a company that is younger than 5 years. But even outside of that, when an outside investor, whether it's a venture capital firm, which is a more corporate kind of structure, or essentially a company that this is kind of what they do, where they look for startups that they like, that align with kind of their vision, and then they put money towards it in order to grow and expand it, et cetera.
Okay.
Or an angel investor, which is typically one person, and like you mentioned in like the intro, these investments are typically much smaller. So I hope I answered your question.
Yeah, you did. I think. What would you say some of the pros and cons are of accepting outside funding? Like, just from a general overview.
I would say, the biggest pro, I think for me, would be your growth track has now gotten much quicker and much larger. And I think the other thing would probably be from a network standpoint, advice standpoint, knowledge standpoint. Typically those kind of expand as well, depending on the kind of partnership, let's say, or relationship you have with the angel or the VC.
Yeah.
But I would say, for me, those would probably be the two biggest pros.
Okay.
What about you?
I agree.
You agree?
Yeah, I agree.
Okay. From a con standpoint, pretty much the exact opposite of the bootstrapping route, which is control, right?
Okay.
When you have someone investing into your company. Now, again, we can go down the rabbit hole of the different kinds of deals that you can do, different kinds of investment, right? Whether it's equity-based, maybe it's a loan, whatever it might be. At the end of the day, no matter what kind of deal it is, you're going to be losing some sort of control and you're going to have to be communicating with people to make a decision. It's not like, you're going to be the only person making the decision. You're going to have to be talking with people, seeing
Yeah,
if
I
they
mean, there's-
agree, and sometimes they may not. So that might be something that you have to very, very seriously consider.
Yeah,
You know,
I agree. I think there's so much to it that
I know you're big on that. And especially in our journey, let's say, you've been very, very kind of adamant about that. Which I respect and can definitely agree with.
Yeah, I mean, in a nutshell, I've been on both sides of the spectrum multiple times, and I could say that. Sorry, I've been on both sides of the spectrum multiple times, and I can tell you that there's pros and cons to both.
Yeah,
and yeah, I'd like to touch more into this, as we kind of go into that pros and cons section, but I believe that it really comes down to where you are. And what your goals are, what industry you're in, and what space you're in. I think that they're not exclusive to one or the other.
Yes. So for those that, because we kind of just mentioned it in passing, right? Angels, venture capital firms.
Yep.
What is the main differences between these two? Because again, as a more of a baseline, both of these kinds of investments would be considered outside investment, right? These are people that are not founders of the company, didn't create the company, but they are investing in your company. So I guess, again, to rephrase the question for you, main differences between a VC firm and then, let's say, an angel investor.
Okay. Well, just to clarify, it doesn't necessarily have to be a VC firm. It can be a VC, right?
Correct.
But yeah, there's a big difference between angel investors and VCs, right, in general. Think about like angel investors as like your aunt, right? That believes in your big idea and can fund it, and that they're ready to take this early risk as an individual to back you on this idea early on, right? And from a venture capital perspective, a good, I guess, analogy would be think about it being like professional sports. It's bigger, it's more competitive, it's more hardcore. There's higher standards that need to be met, and these firms step in with large funds and large fund sizes, right? Usually, once your business shows potential for big league success, that's essentially just
I like that.
In a nutshell. That's how you can understand it. Now, of course, there are other differences like monetary difference and fund sizes. Typically, most VCs have a type of investment that they would like to make, whether that you're pre-seed or seed or Series A, Series B, pre-money, just wherever you are in that spectrum. And even some VCs would like to come in even earlier than that. And then some VCs like to come in when you've generated X amount of revenue, or this is how much you're doing. There's so much, right? There's just so much within that space. And then there's fund size, right?
Correct.
You're talking about typically VCs invest anywhere between, let's say, $250,000, let's say, is the mean, going up to, depending on Series A, B, C, millions, right? Angels could be a $20,000 investment, could be 30, 40, 50, typically goes up to like 200,000, I would say, that you're really categorized as an angel investment. But even then, there's other layers like accredited investors within angel investors and things like that, of that nature. So that's the key differences. I hope that I answered your question.
No, for sure. I think that definitely gives some substance and some clarity as to the two differences. I feel like we're just kind of throwing these terms around here, so
no.
It's important to kind of give some context for sure. So with that being said, what do you think some of the pros are and even cons of accepting outside funding? How would they, so part two of that question would be, how do they kind of contrast from, bootstrapping your startup?
So the basically pros and cons of outside funding.
Sure. Yes.
Outside funding can basically, in a nutshell, turbocharge your startup's growth. That's the biggest pro, right? You've got more money, more resources, more connections.
Yeah.
But you're also under a lot of pressure, right? You also have less control, have less freedom to do things, to even pivot sometimes, right? Bootstrapping on the flip side, it's a slower ride, slower journey, crazier roller coaster, I would say, but you're in the driver's seat all the way, and that's really the biggest difference.
Yeah.
And I think that we've talked about this in numerous times in our past experiences, is like, how fast do you want to grow? And that's a big decision you have to make.
Correct.
Because when you get any sort of outside funding, you have to start answering to people. You are no longer, believe it or not, you are no longer the main character of your show.
Mm-hmm.
There are other characters that decide what your main character does in your own show, if that makes sense. Like, in a way, you're being controlled. In a way, you have to...
I thought of, like, this really weird show that I watched one time.
What
where this guy, like, pretty much was owned by, like, 3 people. Like, actually legally owned. And, like, these people paid him to own him. And, like, it would literally be, like whatever the salary was or the payment is, like, okay, go do this. Go do this. Break up with your girlfriend. And he would have to do it. I forgot what show it was, but the way you said it, I just kind of...
I mean, that's... In a nutshell,
it's a little bit extreme, but yeah.
That's just how it is. I've been there.
Mm-hmm.
I've been there. I could tell you that it's not a fun place to be, to operate under so much pressure, you know? And...
well, I guess I'm glad you brought that up, because I guess now I was going to ask you this question. How does, let's say, that pressure, let's say, or maybe in some sense, the standard kind of impact some of the decision making if, let's say, you were to accept outside investment compared to bootstrapping?
Interesting question. I would say that this is the greatest comparison would be choosing between a marathon or a sprint. That's really what it is. You know, bootstrapping is a slower burn. You grow at your own pace, and outside funding can rocket your startup forward. Mm-hmm. You're going to space, and the race is intense, and the stakes are really, really high.
Yeah.
But that's in a nutshell. That's how it impacts the growth trajectory.
What do you mean by, or can you give some more explanation as to what you mean when you say the stakes are really high?
It's high risk, high reward. The stakes are really high, meaning...
well, we know what the reward is, right? But what would be the risk? Right, the reward obviously is growing your
You're operating under a very limited time frame when you take outside funding.
Now, I asked this question because even for me, when I was getting more acclimated, this is really something that I didn't really know about.
Okay.
And I think for some of our listeners and viewers, this might be a portion of this that they are also not informed about. So if you can kind of give some context as to what you mean by like that risk and that time frame, I think that'd be great.
Risk and the time frame?
Yeah, like the time frame that you were just about to kind of dive into here.
So typically when you raise money, you're raising money for a 12 to 18 month time frame. Mm-hmm. So let's say I go out tomorrow and for Venture Hustles, we raise $1.5 million for, an 18-month projection runway. So the time starts ticking the minute the money hits the bank account. Mm-hmm. And you have to start hitting your KPIs, your key performance indicators, the metrics that you're promising the investors when you pitch them, when you've sold them on the idea. Mm-hmm. Now, if you start falling short, the money stops coming in. They can pull out, or let's say you've got everything in, and that alone is like a black dot in the landscape, in the market for you. No investor is going to come in after. There's just so many other limitations and risks that come in. So the minute you do that, you automatically have a shelf life. And the shelf life determines whether you're going to succeed or fail.
Yep. So
that's the race. That's the pressure. That's the decision you have to make, essentially. Now, raising $1.5 million doesn't mean we're $1.5 million richer.
Yep.
You know? But if we were bootstrapped and we generated $1 million in revenue,
then we would be. Now, also something to keep in mind, right? And this is very well said, is that let's say 1.5 was raised.
Yep.
As you're kind of going through that process of acquiring those funds, you're going to be in a place where where every single dollar of that 1.5 is going to be allocated to, and then what the result is. Right, so if I put in, $500,000 here, what should I be getting back in return, almost? So the money is very organized. You know exactly what's going to happen, and then that's kind of where those KPIs come into play. Where based on this is what we should be doing.
Yes.
And then if you don't hit those KPIs, which essentially, goals really.
Yep.
Then what happens next? You don't get any more money. Maybe they say, okay, shut the company down,
Mm-hmm.
right? All of these things are possible.
Mm-hmm. And I mean, there's also, not to mention, like, no investor is going to come in. No sound investor, no sound VC. And angels, maybe you might get away with shitty contracts and just fabricated or overinflated numbers. And a lot of people do that. It's easy to fool angels, right, that are inexperienced.
Yeah.
But VCs do their due diligence.
Mm-hmm.
So they look at where you are and what you've done and what you're projecting or what you're promising, right? And see how realistic that is and make an educated guess and highly educated guess and take that risk and put that money in you, right? And then the reality is you just never know. It could be a ripple effect from everything that you've built up to that point.
Correct.
You know?
Now, do you think, in your humble opinion,
Okay.
is there a better route between bootstrapping and VC funding, or bootstrapping versus VC funding, or do you think it's more dependent on the situation, the idea? I mean, is there a clear-cut answer, or is it very dependent on your situation, your idea, goals, let's say?
Yeah, it's exactly what we said earlier.
Yeah.
You know, there's no one size fits all for this.
Mhm.
That the reality is, it's basically asking, is pizza better than sushi? Right? It really depends on your mood and how you're feeling. You know, but the reality is, your choice depends on your vision, your business model, your financial situation, and how much control are you willing to share or give up. And I think the biggest thing is like the industry, right? The business model, the industry. It's what route is better. It really depends also where you are in your career. You know, there's just so many different factors. If anyone has any questions, honestly, and you'd like to give us a scenario of where you are in your career and you're deciding whether to do this or raise money, drop your scenario in the comments or DM me and Jack.
Yep.
We'll listen to you and analyze and give you some feedback, because that's much more better for a tailor-fitted situation than us saying from a generic perspective. Like, for example, us, right? We're about to start a new venture this year. Just to briefly touch base on that. Both me and Jack, and we're currently actively working on it, and we do have the option to go the VC route or bootstrapping. And in our case, it's not necessarily bootstrapping because it's an actual business. We're just investing our own money.
Right.
But in a way, it is kind of bootstrapping, right? But the reality is, what's better for us? We don't want to give away any control. We already thought about the structure of this business, of it not being to raise VC money, but to potentially exit someday.
Yeah.
And that doesn't require a lot of capital, but that's just what it is. So
Situation based.
it's completely situation based. You just have to really think about where you are.
Yeah.
Now, if you're in a highly specialized industry, I have to say, right, something that's like in the medical space or technical hardware or anything like that, you do require a lot of initial capital.
You need capital
for just R&D and things like that. And then you do require, just capital to build your IP, your intellectual property, production, distribution, marketing, and then building the team, all that, typically, let's say $1 million, $1.5 million, $2 million. I mean, you're not going to be able to get that from your angel investors, your uncle and aunt, your or your friends and family. You're not going to be able to do that.
Yeah.
You're going to need some large VC backing. So in that case, you don't really have an option. You might have $1 billion idea. You might have a unicorn in your hands, but you might be physically incapable of bringing that to life.
Correct.
With the means that you have available. Even if you have 50 friends and family ready to line up to back this idea, might not be the best idea for you to take money from 50 of them. 50 different people like
Correct.
that. So you might want to start thinking where exactly it is. It just completely depends on your situation. Now, in your opinion, I guess, like, what do you think? Is there a better route? Is there a clear route?
I don't think that there is. Again, I strongly believe it's very situation based, and then also with the industry as well. But I think another part of this is what your goal is for the company as well. Because there are times where people start companies and it's like, hey, my goal is to build this up and then exit and sell it in 3 to 5 years.
Yep.
right? So if that's the case, then maybe you should think about getting outside funding, or maybe you shouldn't, right? So again, depends on your trajectory, your goals, but then also like speed.
We actually deal with a lot of customers and clients in our world, in the startup world.
Yep.
Our customers are mostly startups, and
Yeah.
they sometimes when I talk to them and I ask them their goal, they don't. Of course, you can relate. They don't even know it. So the reality is, like, I think it's really, really important for you to figure out where you want to be, like what your end goal is, what your exit strategy is going to be. People don't really piece that together, and a lot of these questions that we're asking, these hypotheticals, are completely dependent on what that answer is.
Yes. Now, also with that being said, for more clarity, it's not like I want to make a lot of money. Like, no. When we're asking you the goal, it's like, in 5 years, where should the company be? Where do you want it to be?
Yeah.
How much revenue should you be generating? How much control? How involved do you want to be? How many employees do you want to have? Those are the kinds of like thoughts and things that you should be thinking about, and that might give you like a clear vision as to what potential step would be best.
It could be also very clear, just to be very clear, that prerogative might change and shift as you progress in your business.
Without a doubt.
Let's say your plan was to exit at $2 million, right? Sell the company for $2 million. And you're doing so much better, where you're like, you know what, we'll hang out for another year. We'll be able to get a higher offer. I just think that you shouldn't let those concerns and problems be a hindrance to setting your goal. I think you need to set the goal, or just an initial idea, just to kind of have a North Star to follow.
Yes. Yes.
And then that can change, and that can pivot, and that can kind of twist and turn. But that's essentially what I would say. Now, what's one piece of advice you would like to give our listeners, with bootstrapping or VC decision?
I would say one piece of advice would probably be, for me, whatever decision that you make, be sure that you're 100% committed with that choice. You don't want to make a choice, whether it's accepting funding or denying funding, where in a week, 2 weeks, 3 months, you say, damn, I should have done that. Or I shouldn't have done this. I know that might sound a little bit vague and like, oh my God, really? But the reality is, you don't really want to have any regrets, but then also do the proper research, take the time in order to compile your thoughts, what you think, your goals, and then make a decision, believe in your decision, have confidence in that decision, and then move forward, strongly and with 100% conviction. I think that would, be the most worthy advice I think I can give without, again, going to specifics, just because it's very dependent on situation. You have a piece, again, you have a little bit more, really a lot more experience in this realm. So what would you say to that question?
It's pretty much what I said in terms of choosing. I think that I'm a guy that likes to operate off of my gut. I analyze, but I don't overanalyze, if that makes any sense.
You don't get analysis paralysis.
Yeah.
Yeah.
I just think that, like, I'm in general, I personally am a very analytical person. I like to do my research. I like to think. I like to mull over, and I like to strategize. The one thing I do not like to do is just stick within my own head. Get stuck with a process. I like to just think about something that strategically makes sense, try to educate myself as much as I possibly can, consult with the right experts, and then pull the trigger. Now, a lot of this comes down to an education perspective. Like I said in the beginning, a lot of people don't have a choice, but to me, the way I look at it is a matter of effort, man. I didn't get my early companies funded by being lazy. That's the reality. By not taking risks, by not going out there and trying to network and build relationships. I did all that by just pulling the trigger on every opportunity I possibly could get. And I could tell you that on that side, it was mostly related to outside funding.
Mm-hmm.
It wasn't bootstrapped. It was bootstrapped in the beginning, but then outside funding. But as you start doing these things, you start realizing what's important and how to prioritize. My next company was completely bootstrapped. We started on a shoestring budget, which is now the headquarters that we're sitting in right now. That's where we're at. So I really got to go back and see if I can find some early notes on how much I started that company with.
That'd be cool.
Because that would be really, really cool.
Yeah.
And then just building to that. But that's the thing. I've been on that side. I've been on the side of VCs and answering to investors. I've been on the side of bootstrapping, and I can tell you that I would lean towards bootstrapping and funding my own venture 10 out of 10 times. There's always something thrilling about building something from the ground up with your own blood, sweat, and tears. And I like having the freedom to just be able to do crazy shit, adapt, pivot without having to answer to a room full of investors that control my outcome and destiny and get to tell me how long is my shelf life.
Yeah.
That'll be my signing off note, Jim. Is there anything else you got?
No, I think I kind of shared my piece here before actually the question. So, I know this is a little bit more of an analytical or information-based episode here. But again, when Saj and I kind of discussed the episode topics, we feel that this was something that we haven't really covered in depth. And if anyone's in that sort of position or is going to be in that position shortly, maybe this episode will help. And our DMs are always open. Venture Hustles, my Instagram, Twitter, Saj's Instagram and Twitter, and all the other socials. So, with that being said, ladies and gentlemen, we appreciate you guys no matter where you are. Hope you enjoy the day and night, and we will see you next time.
Yeah, venture hustles, life is really what you make it. Building up your brand is whatever you create it. Really ain't no limit. You just gotta love it. Working day and night, it's all about the venture hustle. Hey, venture hustles. Time to take it to the next level. Let's go.